Mr. Baliga, good morning. Pleasure having you with us right here on News9 again. Take us through your views, the trading scene set up this Monday morning. Well, not in line with US markets reaching all-time high, but it's not really the worst that we've seen. I think a 1/5 percentage point cut in Sensex is not really bad news, is it?
No, after the sort of a move which we have seen in the past few days, a small correction, in fact, is healthy for the markets
Right.
because it sets it up for the next move up. Because if you look around, as far as the news is concerned, geopolitical issues are not really bothering the markets much now. I think the worst seems to be behind, at least for the time being. You have enough liquidity in the market. If you look at the macro numbers, especially India, I mean, it's been better than expected. Whether you talk of inflation, whether you talk of GST numbers, GDP growth, industrial production, PMI numbers, I mean, wherever you look at, the numbers are better than expected. Now, going ahead, clearly the markets are expecting something from the Q1 earnings. So that's the other trigger which the markets could have. I think the only issue which can happen over the next few days is the tariff deadline. That's July 9th. So before that, I really don't expect the trade agreement to be in place. So there could be some amount of caution or speculation on this subject. So that's, I think, the only issue as far as the markets are concerned. Otherwise, if you look at it technically, I think 25,200 was a major resistance for the market. I mean, we have touched those levels a number of times and gone down. And in the last few days, we have crossed those levels decisively. So even technically, we are poised for at least a decent up move from here. And I'll not be surprised. I mean, if over the next couple of weeks, we are able to cross the highs which we had seen in September last year.
Right.
So I think we need to be bullish on the markets at this point of time.
All right. Well, those highs that we saw on 27th September, you're saying a couple of months, perhaps. What would be the dateline that you would set? Is it going to be September again, or do you think we will see it earlier, perhaps in the month of July or August?
I think we should see that in July. I mean, if you have a couple of the first set of numbers coming positive as far as the Q1 numbers are concerned, I think we should be able to cross those earlier highs.
Okay.
I mean, from a fundamental angle, yes, I think at those levels the markets could again become a tad bit expensive. But right now, technically and the momentum wise, if you look at, I think the markets are poised for those levels.
Right. You were talking about geopolitical events, especially the tariffs, Mr. Baliga, just a few minutes ago. But another geopolitical event or a geoeconomic event would be the US's Fed Reserve's decision on whether to hold rates or go ahead, come under pressure from Donald Trump and cut those rates. Now, the July policy is just a few days away. If we were to genuinely see a cut this time around by the US Fed, even though Jerome Powell is saying that he's not going to cut right now, he's going to wait until September. But in case we do see a cut this time by political pressure weighing in on his decision, what could that mean, especially for IT stocks in India?
I think, overall, that should be positive because as far as the IT stocks are concerned, I think the major issue has been the growth as far as US is concerned. And because of that, the sort of order flows which can come for the IT stocks. So in case this happens, it should be positive for the IT stocks overall.
All right, positive for IT stocks. Meanwhile, you also talked about inflation in India, India's macros being fine. Inflation data, which is a high-frequency indicator, is again likely to come out for the month of June in the next few days. Now, I want to specifically talk about FMCG stocks and FMCG stocks, which are largely going to be linked to inflation. What is your assessment on inflation data, given the fact that monsoon expectations are expected to be in line and no real adverse impact of monsoons expected this year? How do you suppose FMCG stocks should be traded for the next few months or so?
Monsoons have been positive in the sense. We've already it has reached all India. I think 9 days prior to the average, and the monsoons have also been decently widespread at this point of time. So clearly that should be good for the FMCG sector as such. Where in fact in the last couple of quarters we have seen that volume growth has been a concern. But now I think it could be driven by the rural growth, which is expected at least over the next 2 quarters. So FMCG is one space to be in. And if you see, even in this sort of a rally, we have not really seen FMCG performing. In fact, in the last 12 months, we have not seen FMCG performing.
That's
so
right.
I think a decent amount of value in that segment. So that's one to be looked at.
All right. And banking sector continues to reel under some pressure. In fact, we saw exactly the same thing on the heat map on Friday. And this morning, again, we are seeing that the banking sector seems to be under some pressure. HDFC Bank, ICICI Bank, both down more than about, about 0.4% or so in trade this morning. And similarly, you've got Kotak also down about half a percentage point, Axis down about half a percentage point. What is stressing out the banking sector at this moment?
See, I think, this is sort of a correction which we are seeing right now in the banking pack, or the sort of weakness which we are seeing. I think it's a buying opportunity because, going further, I think over the next 1 or 2 quarters, we should really see the credit growth really happening because of the rate cuts which we have seen, which are much better than expected. And I think the next rate cut would be sometime in December, not before that. And in the meanwhile, I think we should see that credit growth happening, which should be positive for the banking space. So I would say utilize any of these corrections to buy into banking because if you're positive on the Indian economy overall in the long term, you can't go wrong with the banking space.
All right. So buy on dip seems to be the strategy coming in from Ambareesh Baliga for banking stocks. And I also want to draw your attention to energy stocks this morning, given the fact that oil prices have cooled significantly. In fact, now trading at their lowest levels in 2023. And we are seeing a positive rub-off of that on ONGC, IOC, OIL. All these stocks are up more than about 1% or so in trade this morning. Where do you expect oil prices to finally settle down, assuming that stability in the Middle East is something that one can hope for, at least for the foreseeable future? Do we think that there are no more shocks expected on the oil front, and hence this would be a good time to stay invested in energy stocks, sir?
I think that's a major assumption that there won't be any future shocks because these shocks do come without any sort of warnings. But again, assuming that there are no future shocks, I think the oil prices should stabilize in this region, possibly plus minus either 5 to 8% from here. And that would be positive both for the producer nations as well as the user nations. I think there has to be a decent balance, and that balance is around these levels. As far as the sectors are concerned, I think the OMCs would be the biggest beneficiaries of this. At the same time, the user industries. You have paints, you have tires. It's across. It is all the downstream user sectors. I think they would benefit to a large extent. And like I said, I think that the top beneficiaries would be paints and tires.
Paints and tires likely to be the top beneficiaries on the movements in the oil market. Mr. Baliga, I also want to specifically discuss 1 or 2 stocks with you, and one happens to be Indigo, Interglobe Aviation. And after all the turmoil that we are seeing on Air India ever since that horrific crash on June 12th, there seems to be anecdotally, at least there seems to be some evidence that people are preferring not to fly Air India right now. And we are seeing the Indigo stock for the last almost 20 days or so has been climbing up gradually a little bit every day. Even this morning, Indigo is up almost 1.7% or so. At the same time, of course, we are also seeing the cooling oil prices, and that also seems to bode well for aviation stocks. But what is really driving Indigo, and what should the investors do, those who are already invested and those who perhaps want to take part in India's aviation story?
See, Indigo has been doing well for a long time. So whatever has happened, unfortunate incident with Air India has happened in the last, like some time back. That in a way has benefited Indigo because people do prefer to fly Indigo if given a chance as compared to Air India. And at the same time, it's been like one of the most efficient airlines, and that's one of the reasons why it's getting this valuation. And now with the oil prices coming down, which again is a major input for any aviation industry, I think that should be beneficial for Indigo even going ahead. So I think those who have Indigo, I think should just hold on. I think this is a decently long-term story. And those who don't have Indigo, I think any sort of a correction should be bought into.
Right, any correction should be an opportunity. Stay with me, Mr. Baliga. There's another very interesting story coming from Zomato, and that is something I want to discuss with you again, given that there is positive movement even on the Eternal stock this morning. And this comes by way of Dipinder Goyal, who co-founded food delivery platform Zomato, is now eyeing the regional air travel segment with LAT Aerospace. And that seems to be according to a LinkedIn post by the aerospace startup co-founder Surabhi Das. Goyal's bet on the aviation venture could perhaps redefine regional air travel in India, which is at a nascent stage as uncertainty remains over regulatory clearance, technological capability and public adoption. Now, as per the LinkedIn post of the founder of LAT Aerospace, Surabhi Das, she said that while building Zomato and flying across India, Dipinder and Das kept circling back to the same question that why is regional air travel still so broken, expensive, infrequent and mostly out of reach unless you live in a metro city. Now, India has 450 plus airstrips, but only about 150 of those see commercial flights as per Surabhi Das's post. Now that means nearly 2/3 of aviation potential is being wasted. Meanwhile, millions in tier 2 and tier 3 cities spend hours, sometimes days traveling by road or rail. Now, outlining the vision behind building LAT Aerospace, Surabhi Das further stated that affordable, high-frequency and designed to connect the places the airline industry has overlooked, LAT's aircraft will take off and land in compact air stops no bigger than a parking lot built closer to where people live. So what she says is no kiosks, no security lines, just walk in and fly. Mr. Baliga, no direct reference to Zomato really partnering with LAT Aircraft and Airspace, but an interesting sort of an observation coming from one of the co-founders of Zomato, who now heads LAT Aerospace, saying that perhaps LAT small aircraft just operate from parking lot sized airstrips, just come, board the aircraft, go, come back. Is this a story that you think is likely to pick up? Because I remember last year, even Indigo had suggested that it is signing with the Archer Aviation and vertical takeoff landing. Intra-city taxi services would start by 2025. It later got pushed to 2026. How do you see this space and how do you see players like Indigo and Eternal both participating here?
No, see, it's a huge opportunity, no doubt. But then aviation overall, if you look at the history of aviation, not many people have been able to crack the code. And Indigo, I think, is the only Indian aviation company in the last so many decades. I mean, we have seen more than 10, 15 decent sized aviation companies come and go. So Indigo was the only one which managed to crack that code. So we need to see as to who is able to come here and crack this code as far as the regional connectivity is concerned. But like I said, it's a huge opportunity. Again, we need to see whether someone like an Indigo with past experience is able to do that in this space, or whether someone without any experience coming in with new ideas and cracking the code. I think that's the big question.
Right, that of course is the million-dollar question that we will leave our viewers with. And thank you so much, Mr. Baliga, for your time this morning. Pleasure having you as always right here on News9.
Yeah.